Good morning. Welcome to Wavy Tunnel Pro Market Outlook for April the 16th, 2026. Before we start, please have a look at the disclaimer and that this presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendations of any kind. Once you've completed that, we can have a look and see what's in store for us today. What we do know is there was mass hysteria yesterday as the market has just rallied and gone from strength to strength, record highs on S&P, and so wow. Today, initial jobless claims. Now we start looking at economic data as the market seems to have put the Middle East in the rearview mirror and is now looking forward, thinking that's done and dusted, and now we wait for the impacts, the inflation impact, and we start moving back to data and economic fundamentals to decide on what the next moves are. So there you can see a long list of economic data that's coming out today, and we start now getting into on earnings into the companies. Banks have all smashed it out the park, so I'm assuming that companies for this first quarter are going to be smashing it out the park as well. So we all know what that means. Buy the dip, back to the way that the markets have behaved previously. You just buy the dips, close your eyes, and you make a lot of money. Foolish, I think, but anyway, that's not for me, that's just my side comment. Right, let's go and have a look at the euro. So what we're going to experience now is dollar bullishness, and you can see it in the charts because everyone's going to want to move away from the dollar. Everybody's thinking that normal business has resumed, that people are going to diversify portfolios as well, less so in America and more into the rest of the world. From a currency perspective, the Chinese yuan is probably going to be the main beneficiary of all this. So you probably look for some sort of rally in the currencies against the dollar. And so we can see that, although today in looking at, but again, you're going to hear the same song repeated, and that's why I won't spend too much time in the charts today, and we'll just observe our levels because we've moved away. We need a correction, as we do in the equities. We've had a massive rally, and obviously you've gone from possible capitulation to record highs, and it's too quick. It's too quick. If you swim from the shore and you go like a bat out of hell out to sea, you're going to get tired. You need to have catch your breath. So catch your breath, people, and let's analyze the charts while we're catching our breath, and let's look for levels. So on the euro, we can see now any pullback into the wave, any pullback into 17, and a possible fill the gap. So 16.5 would be for me a buy opportunity. And so no real divergence there. There's some internal divergence. What I mean by internal divergence, if I look at wave 1, there I can see the move. There I can see the next move for the third wave. So no divergence between that and that. So that's no begging, I'm getting tongue-tied. There's no divergence there. What I mean by internal divergence is that peak and that peak within this move here, there's divergence. That's called internal divergence, which means we need to correct, which means, and again, it's like so these are good examples of markets where you can see that the bungees can just meander across the top here, and they started down here at 16, and look how far we've got. So this is just a heads up that the market has not rolled over yet, and you've got to then use this 45 degree to keep buying dips. So we are looking at this area here between 16.5 and 17 for possible buy trades. Let's tidy that up a bit and see how we can have a look at that. Let's do a little bit more. There we go. And do we still like that area? Yes, we do. There it is. So we can see it on the hourly as well. It's difficult to sell at the moment, but again, I would use this box. And I'm going to show you examples because I had them on equities yesterday, and just to show you how the boxes worked. And so we can see again, so this is for the breakout and then for a continuation lower. So as long as we are staying above this, the pressure is going to be on the upside. So this becomes your pivot point now, 117.70. That's a pivot point. You start staying, if you get down there and this wave starts rolling over, any rallies back in, you can start looking for sell setups. And if the market comes down, you start looking for buy setups around 16.5. So that is the euro. The song is going to be the same for sterling. Let's get rid of that. And so we can see breakout from that level and we're heading there. So we've got our band, we've got our range, and here's a bigger range. You can see across there. So there's the bigger range. So you trade within the bands and you're using the system to guide you. So again, you know, we've moved up, strong move up. You see, here's an example of where you got this wave up, you have the internal divergence, so you know there's going to be the possibility of a rollover. And then the rollover comes and then you get into the trade, and then you can everything guides you on the way down. Then you get into a zone where it's no man's land. Now we are accumulating, consolidating. Different people use different terminologies, and so we get to have a look and see what is happening on this chart. So let's go to the 4 hour. Again, it's the same. We've pulled too far away. We are now...
Order filled.
Here's your range. So now monitor this range and wait for this consolidation to play out or break out, because that's what you're going to be looking at. Below here, below, we pull back to the wave and a possible fill the gap trade. We might get a slight rolling over, and that will be the indication. Do we get through the 50 for a bigger correction, or do we stop at this 134 area? So that's what you need to watch in sterling. There it is again. Wait for the breakout. Look for sells, I would say, at 136, only if the setup is there. And I would look for a pullback into this fill the gap trade on the 1 hour. I would suggest that previous these gaps and this area here would probably prove to be quite supportive. So there's the bottom end of the support zone for you in there. And then you just, while we're doing this, you trade in within the range, and you can see here how the wave is just oscillating around price, and so we need to see what's going to happen there. So So that is sterling, Canadian dollar, all playing out, haven't come down here. We're going towards our target. That still looks like it's in play. So let's have a look and see what we've got on here now. So initially down into this area, 136.75, and we are still on track. I want to see, so this is not finished, I can't use this, but if I was to do first impulse,
target filled.
No, I'd be cheating and I don't want to confuse you. And why I say that is because I can see here, this is still incomplete. So this is stretching away. So 136.75, I would say, is an initial target on the Canadian dollar. And anything back into the wave must still be construed as, because we're looking for lower royal. And so that is an area I would watch there. You can see how trend is still, the wave and the tunnel are protecting us. And so unless we start getting back above 138 and go a little bit deeper, the emphasis will remain on the downside. So here's an area that you need to be observing and watching. Here it is. And it's amazing how the tools always come into that area and they give you a decision point. And if you look into the left and you see the breakout levels, various areas of support and resistance, and look what this is telling you. So fill the gap. So you've got 138, let's call it 138, 137 for the Canadian dollar. And then look for setups inside of that. Aussie dollar. Rock and rolling, going away, breaking new highs, not new highs, I beg your pardon, but breaking the previous high. Again, too stretched. This needs to consolidate a little, and let's have a look. This is very overbought, and so it's one of two things now, and you'll start getting used to this. Consolidation around this level. So difficult to fight trends and try and pick tops. It's a very dangerous game. But once you've got an area, you can go into your lower time frame charts and look for possible setups. This has come too far. So I would look for a pullback into the wave. There it is. So 71, 72, broad range on the Aussie dollar. You've got all the tools here that are keeping you on the right side there. Here's a good example of internal divergence. So no divergence. So when you're comparing peaks with peaks, you can see there's the peak, there's the peak, there's the peak, there's the peak, there's the peak. So there's no divergence between these impulses, which means it's going to go up. Sorry, there's a lot of construction going on in my neighbor's garden. They're building a massive house, so they're pushing boulders all over the place. And so look at this level here, and you can see now that since we made that peak and that peak, now we've got divergence. So that means there's a chance that we roll over. So I would use these. If we break below this level,
target filled,
trade, and then reassess around this level, whether you have a continuation lower, move your stops down, or you take profit and reverse your position. So we can see dollar is strong. Dollar I beg your pardon, dollar is weak. So let's go and have a look at our favorite. the dollar yen, and where's it moved? It's moved comfortably away from 160. Not yet. So it's fighting. Yen is always a good example of this market that, so you can see your range. Still not broken out. Look what's happened today. So we've got some weakness in the yen today. I'm surprised. So I would still look for a pullback into, so broadly speaking, I would say yen is 150. You can't say 160 because they will test the upper bounds, but I would certainly say, you know, in this 60 up here, if the market breaks out, the Bank of Japan will push it back in there. And then that will happen is you'll go into this kind of range again. So we need to see how that plays out. Let's go to the Mexican peso and see what's going on there. Let's go to the 4-hour chart. And also, everything's at this decision points. Everything's strengthened against the dollar. Now the market's waiting to see what happens. So I wouldn't discount corrections in everything against the dollar, and I wouldn't discount any equity pullbacks. So sometimes the crosses become a slightly better play. Nice setups here. Look at this. We're looking for a pullback, fill the gap trade, possibility of something a little bit deeper. And so look at those for those people that watch the cross currencies. So there we go. Let's go to the futures and let's go and have a look at our S&P and gold and oil. That's my trading chart. That's the one you want to look at. I'm short, just for the sake of transparency. I've just sold it at the highs here in S&P and now. So and the reasons are plain to see. So in the Nasdaq, I can see we've come off. Rallied from under 23,000 back up to 20. It's insane. I mean, but it's not for me to. So again, good example of how the wavy tunnel. So if you turn off the noise, turn off the news, and you were just looking at a chart, you would go, right, breakout one. Here we go. I've got to move up, and there we go. When you have a strong move, your pullback is always very small. It's 38.2, if that. Perfect. 38.2 targets. And then you have this period of consolidation. So this is a good example of how you just draw on your charts, get your areas, breakout. And this is what happened yesterday as well, where you have these periods where the market is running away, they're not sure what to do, and off they go. Again, breakout. They never came back to have a look for you to get in. So always what I would always say is, but this is a 4-hour chart. We probably see it a little bit better on a 60-minute. You just want to have a second look breakout. Again, no second look, straight out. So you're either doing one of two things in here. You're leaving a buy limit order above or sell limit order below. And the same thing happened here. And so the market was poised and ready to go. And off it went. So I would be looking for some correction. Look at this. And you can see now, as we stretch away, market doesn't like it. It will come back and have a look. it stretches away, comes back and has a look. And now we're getting into this zone again now where what do we do? Are we going to have a deeper correction? I think so. I think we're going to get a fill the gap trade. We've got option expiry tomorrow. We had VIX expiry on Wednesday. There was massive buying in options yesterday. Yesterday was the record for, I'm just talking to futures traders here where they'll understand what I'm saying, this zero DTE. It was unprecedented, the volume that was in there. But again, it's very clear to see that if you plan your trade, you've got the wave supporting you here, you've got a consolidation box, is this going to continue? And you have, there's a good example, breaks out, comes back and touches. That's your trade, and off you go. Now look how the bungees have stayed from 26 all the way. So this is where fishing for tops is difficult. And I'm a prime example of fishing for tops. So I would always fish at tops, but I would get to break even as quickly as possible. Then I wait for the next impulse and I would fish to see if that's the top. But I mean, again, this is not trading recommendations. It's just the way where I believe it's gone too much and I know it's going to correct, but I don't know when. So I keep testing that theory. And that's why when I've come in this morning, I waited for the Europeans to go have a look back at the there it is, look at the highs, what it is, and that's why I've just sold this morning. And when we get down here, so it'll already be in break even. I'm just looking at my chart across there and I can see my stops have already moved down. So if it goes back into the box, I'm out, but I will sell it again when it comes up here. And I would be looking for a bigger correction over the coming days back into levels closer to 25,600. And that's not a very big correction. So let's go and have a look at the S&P 4 hour. Same thing. Now this one got record highs. And now you can see we're teetering. And I still think we've got option expiry, OPEX tomorrow. The markets are going to pull back into this fill the gap trade, so back possibly to 60, but this become pivot, this big area now. 68 holds, we're going to keep testing new highs. Below 68, we will go deeper into this 65-50 area. Those are the levels I would observe there. Oil, we can see that had a move. As I've explained before, you can see and you look at what it does. It doesn't do anything. Markets are anomalies. And so there's a theory with working with oil traders, they sell rallies. That's what people in oil do. They sell rallies. They always sell rallies. So in what they are doing, and I can promise you for that the oil producing countries would have been hedging their socks off above 100, and you structure options that also give you topside participation, so you're not locking in rates. So you can see again here on oil now, we're waiting. Are we, aren't we going to have resolution? And so there's the range, oils, and so I would say at the moment, as long as we don't get back above 100, the contract has rolled in oil today. I rolled my contract over, so it's moved into the June contract. for people that just listen, that are not futures traders, this is a deliverable contract, so you've got to be careful when you trade this one, because if you've got an open position, and this is what caught people, it's just a very interesting fact. Let's go to the it was where people bought oil at zero, and the people wanted to know why a minus number, and the answer was simply, I've probably not got enough data on here. It's because it's a deliverable contract, and when people found that out, they had to sell those positions that they bought at zero, and that's why it went to minus 40. I'll just give it 2 minutes to see if the chart comes up. If it doesn't come up, it's just very, very interesting how people trade without knowing what the actual fundamentals are of the underlying contract. So you have to be very, very careful. So, no, it's not going to do it, I don't think. Anyway, it's just an interesting story. I will, let's have a quick look at gold. Let's go to the 4-hour chart. Hopefully this loads up quickly. I'll be messing with the charts now, so it's probably going to be distorted. So let's leave it there. Be vigilant, be careful. The markets seem to have got very, very aggressively bullish on equities again. They are looking, so that would mean bad news for the dollar. So that's fundamentally, people start shifting their focus now to economic data and releases. So you need to be careful of that. So just be mindful and careful in your trading. And I will do a comprehensive, detailed analysis on the weekend that'll be ready for you on Monday. Have a good weekend, safe trading, keep stops tight, and good luck. Bye-bye.